Hello and good morning. You are watching The Mining Show, brought to you by Blytheweigh on Core Finance, and I'm Charlie Gibson. Now, for those of you who know the calendar, you'll know that the first week in March is traditionally reserved for the world's very largest mining conference, which happens in Toronto, Canada. It is the Prospectors and Developers Association of Canada, affectionately known to absolutely everyone as PDAC, and of course Toronto, the commercial capital of Canada, where when the weather is like we had in England over the last week, that miraculously the city seems to keep working. There is always a colossal amount of activity around PDAC, and one of the companies which has put out an announcement to coincide with the mining show is joining us now live all the way from Toronto. The company is Rambler Metals Mining, and we're being joined by the Chief Executive Officer, Norm Williams. So Norm, very good morning to you. Thank you very much indeed for joining us from sunny, snowy and cold Toronto. I think let's get the important stuff out of the way first. What is the temperature there, and is the city still working?
Oh, of course, we can handle a lot of snow in a big city. Yeah, I don't know, it's -1 or 2 with a chilly wind off the lake, but beautiful day, sun is shining.
Fantastic.
Everything's operational.
I'm sure you were all laughing like drains at us in London, who have had weather a bit like that over the last week, and the country pretty much ground to halt.
Yeah, you guys talk in millimeters, we talk in centimeters and inches over here before we get to alarm. But yeah, no, absolutely, it's been a nice winter in Canada actually.
You're just boasting now. Now, Norm, tell us, Rambler obviously is the owner, the operator of the Ming mine in Newfoundland. Now, we're very familiar with Canadian mining over here, but when we think of Canadian mining, we tend to think of well, certainly British Columbia. We think to some extent of Quebec and Ontario. I don't think we think of Newfoundland quite so much. So could you give us a bit of a history of this mine?
Yeah, absolutely. Well, Newfoundland, I guess, and Labrador in general, I mean, has a vast amount of mining history. And to be quite honest, there's a lot of unexplored ground in Newfoundland and the island and the mainland portion up in Labrador. So in terms of the Ming mine in general, the mine is a former producing mine. We inherited it back in 2005, but prior to that, previous operators ran between 1972 and 1982. Produced 3 million pounds of 3 million tons of ore, so at around 3% copper and almost 2 grams a ton of gold. So it had a nice rich history, and Rambler was formed in 2015 and sort of started to reactivate the old mine workings. And in 2010-11 brought the mine back into production again. Base metal company, copper, gold, high-end copper. 10% of revenue is gold based.
And it's an underground mine. Does that pose problems, going back into an old underground mine and restarting? It isn't always that easy. Sometimes it turns out the old timers were better miners than they're given credit for.
No, in our case, I mean, to be quite honest, we have our underground conditions, are extremely competent. We dewater to mine, pumped upwards of 300 million gallons of water out of it to get underneath and continue our drill program back in the late 2000s, and there wasn't one ground fault, all the way through the old ramping system. So, that said, it is an underground mine. It's clearly not an open pit mine. It has its challenges, but we're slowly, ramping our way through, and a big expansion that we have underway, and narrowing in on achieving it. So, underground mining, yeah, you just got to know what you're doing, I guess. But yeah, we have a tremendous workforce out in the Bay Bird area, and getting better at what we're doing on a daily basis.
And the grade, the sort of mined grade, is about 1.5% copper with a gold credit.
Yeah, no, we just updated our resource and reserve modeling and resources. We announced that this morning, and what we have now is basically we're on our way with a 20-year life of mine. Our reserve grade will average just over 1.7% copper and just under 0.5 gram a ton of gold. So that gives us, 312 million pounds of copper, 57,000 ounces of gold over a 20-year life of mine. So, and a good point to make here, I guess, is that, as we go deeper into that larger footwall zone that we're expanding into and have been for the last 18 months, as we go deeper in there, the grade and the continuity of that ore body gets better as we go. So we'll mine, between 1.35, 1.5 over the next year or so, but then we'll quickly get into and come back to that reserve grade of around 1.7% copper.
So as I read your announcement this morning, it looked like you'd replenished about 2 years' worth of reserves, but the resource fell, didn't it? The resource fell, albeit it was at a higher grade.
Yeah, that's right. So we replaced all our reserves. Just some drilling we did in the upper part of the footwall zone. We ended up dropping out some of the tons that were there, and that's why you see that fall that we announced this morning. But I mean, overall, we're very pleased with the resource reserve. We're too higher grade, obviously. And if you look at where it's to compared to where we were to in 2015, I mean, we're very close to. We absolutely replaced the reserve. And the more drilling to do, the better we get to know it. But the good news is that we still have that 20-year life of mine with a very nice copper grade and gold byproduct. So yeah, we're very pleased with the outcomes.
And as you look at that zone, that footwall zone that you've been doing the exploration, is that easily accessible from the existing infrastructure? Can you mine pretty seamlessly from the zone you're in at the moment into that footwall zone, or are you going to have to develop new infrastructure to access it?
Yeah, no, good question. And just a point of clarity, keep in mind that we have been working our way to the footwall zone, since we did our expansion financing in June of 2016. So we're actively physically working in the lower footwall zone as we speak. So I just want to make that point clear. But to answer your question, when we started this process in August, September of 2016 to get into that zone, get the development put through to allow us access to more tons, increase our expansion to 1,250 tons per day, we had to put significant amount of development in. The footwall zone sits about 100 meters in underneath the old mine, the massive sulfides that we've been mining since 2010, 2011. But we're in there now. We have block one is broke through from top to bottom on the ramp. We have our ventilation program wrapping up in March, which, to be quite honest with you, will really remove a big bottleneck from the underground operation. That's the biggest bottleneck that we have coming at us now. With that in hand, the ability to sustain 1,250 tons per day is coming at us very quickly. Another pond mill down 40 kilometers down the road, it is waiting for feed from the underground mine. What we're seeing there is we've tested as high as 1,360 dry metric tons. So the mill is ready to go. Vents coming on. We're excited. And, cash flow is just around the corner.
So when do you get to 1,250 tons per day mined and processed?
Through the back end of March. That's what I'm getting at. When we reverse the airflow, we're going to double the amount of volume we're pushing into the underground. We'll be able to run our equipment and get the mine cleared of smoke faster. And with that, as well as with the additional airflow, we'll be able to move and operate more equipment in the higher, bulkier footwall zone instead of having sort of the piecemeal equipment into that zone. I mean, we wanted to have this thing done about 2 or 3 months ago, but again, it is an underground operation. We're running operations and production at the same time, but it's very close now. With that in check, we'll really start to see productivity improvements in the underground. So March is to answer your question. The back end of March, when we get everything reversed, we'll start to sustain that 1,250 target.
And am I right in thinking there's a phase 3 expansion out there at some point in the future to take it to 2,000 tons per day?
Yeah, and a couple of points on that. Absolutely. I mean, the valuation that we see is really when you start to drive the production up to 2,000 tons per day, and then you start to see your C1 costs really come down. And what we ultimately want to build here is a cash flowing, base metal producer that can sustain, the future downturns in the commodity cycle, albeit we're seeing a pretty strong one building ahead of us at the moment. So what we're doing for phase 2, the 1,250 scenario, with that in check towards March, and start to turn our attention to cash flowing and opportunities to improve productivities with that vent system online. Once that starts to tick into 18, we're going to turn our attention to phase 3, like you referred to it as, and that's really that 2,000 ton per day scenario. What that envisions is, looking at reactivating the old shaft infrastructure that back in 1982 was stripped out when the mine flooded. So we're looking at to reactivate that shaft, and we're also looking at the idea of of whether or not we want to move our processing facility. But just quickly to put that in perspective, at 1250, when we get to a reserve grade level, we'll average just shy of 16 million pounds of copper on an annual basis. And that still can give you a very healthy cash flow, which you would have seen in our announcement this morning. We're using 2.99 copper, which is very reasonable. I mean, there's a lot of copper bulls out there that are going very high on that long-term price, but we felt comfortable at 2.99. So if you tack that on to 16 million pounds, it's nice cash flow. But if you go to 25 million to 30 million with that 2,000 ton per day scenario, you really start to see a step change in the economics and lowering of the C1 cost. And that's ultimately what we're set out to do with the Ming mine. Is get it to that level over the next few years.
I must ask you, there's a lot of noise about this in the media generally, but where does the copper you produce go to? Does it go to Europe, the US, or the Far East, or somewhere else? And the point I'm really coming to is, if it goes to the US, are you in any way concerned about all the noise that's coming out of, I suppose it would be fair to say, Washington at the moment, about NAFTA and about the relationship between Canada and the US and Mexico at the moment, the North American Free Trade Agreement?
Yeah, no, absolutely, and you're right. There's lots of noise about that, but no, there's absolutely zero concern about that. All our concentrate, with our off-taker now, the Geneva-based off-taker, they take everything to Europe. We just have a ship on the way now. Actually, it'll arrive in Huelva, Spain in the next few days. So no, absolutely not. Everything goes into Europe at the moment. And in the concentrate market, just talking concentrates, I mean, Rambler does create a very clean product, which obviously gets nice premiums in the market. But I mean, we're looking at a big shortfall. In the last few days, big shortfall story. I've been talking to a lot of people around the conferences. They just came up from the BMO conference in Florida as well, and there's going to be a big shortage of cons coming at us in 19 and 20. So it really looks positive. It's not just me, being copper bull, but the supply side of the chain is under a lot of pressure. So it bodes well for us. We're expanding. We got a reasonable copper price in our projections, and the economics look very nice. I mean, we're well under our valuation that we demonstrated this morning. But what we need to do now is just get to that 1250 and sustain cash flows. And then, I think the market is really going to look at Rambler as an up-and-coming base metal producer. It's taken a little time to get there, but we're quite excited for what the next few years are going to bring.
With all that in mind, I must ask you, I was looking at your share price, and it seems that a couple of years ago, and I'm going to talk in pence because that's the share price I looked at, it was trading around about 30. Now it's trading around about 7. Are you disappointed in the share price performance? Do you feel that investors understand the story?
Of course, I was disappointed. We'd love to see it up in that 12 to 13p range. We did tick up there, and I think really what the market said was, okay, we want to see your 1250 scenario, and I think as we get there, I think we'll end up ticking back up. We did see, I think when we saw that run up, we're on the back end of a U.S. election, and a lot of problems hitting the market of huge infrastructure spend, walls in certain areas of the U.S. And the copper market sort of really took a big jump, and I think a lot of people came in. And then our share price sort of backed off on the back of that as our, expansion into 1250 fell a little bit behind as we previously announced. So I think that's where the share price went. We're also a stock, talking about share price. I mean, we're a stock that's fairly, we're thinly traded. We don't have a whole lot of float now, but we have a big shareholder that's very supportive of where we're going with this. And I think the message to our investors and ultimately our share price performance will be, as we grow this thing forward, there's going to be an event whereby we can unlock a lot of liquidity into stock as we move a big shareholder, and as that fund sort of moves on, and we create that valuation at 2,000 tons per day that I alluded to. With that, we'll expand to 2,000 tons per day. Then we actually become a scalable entity. When you're producing 30 million pounds of copper, that's 30 to 35, 37,000 tons of concentrate. Scale becomes more relevant, and people start to become sort of more interested in the story. So the float will come, the financing will come for that 2,000 ton per day scenario, and I think that's when we really start to unlock the value. Because as you could see in your announcement this morning, I mean, we have a valuation in Canadian dollar terms of around 125, and we're trading at about 68. So there's upside at 1250, but we're very excited. Patiently working our way through creating that 2,000 ton per day valuation.
All right, Norm, I'm afraid that's all we've got time for. But thank you very much indeed. We wish you the very best of luck, and we look forward to talking to you again soon when that ramp up is completed in effect, and the mill and the mine are both running at that 1250, and then we look forward to the ramp up to 2000 at some point in the future. As I say, that's, I'm afraid, all we got time for from the Prospectors and Developers Association of Canada, from PDAC so far today. But stay with us because there will be lots more over the next few days from Toronto and from Canada, and lots more opportunities we hope for you out there as well. I'm afraid that's all from me though for the moment. This is me, Charlie Gibson, signing off for the Mining Show, brought to you by Blytheweigh on Core Finance. Until we're back, you have a very capital day.